Hello, Stonebridge clients. It's Taylor Max here, coming to you from a very smoky Metro Detroit here, as you can see out my window. We're dealing with the smoke from the Canadian wildfires, and it's quite eerie. It actually smells like a bonfire in my office. So, anyways, long story short, I hope everyone's had a great summer thus far. Hopefully, spending time with family, friends, finding time to relax. Hopefully, have some fun. Speaking of fun, it was great seeing everyone out at the Stonebridge Cup a couple of weeks ago. I think it was our fifth year doing it, and it was certainly our best turnout yet. We had great weather, we had great showing, and so looking forward to next year for year number 6, and hope to see more of you there next year. It was a great time. So thanks for showing up, those of you that did, if you were able to. So going to talk for a few minutes here about what's going on in the economy, the market, and just kind of general updates. So there were a couple things that dominated the headlines through the first half of the year. One being is we have a new Fed chair. Kevin Warsh is the 16th chairman of the Federal Reserve. He is succeeding Jay Powell after, I believe it was an 8-year term that he had served. But we're all eager to see how he does. Hopefully he is the right man for the job. And I think time will tell, as it does with everyone. So that obviously the conflict with Iran is something we're continuing to monitor very closely, as are many investors. It's been up and down. It's been volatile. It seems like tensions are starting to ease a little bit with ceasefires, although those have kind of come and gone. But long story short is we're continuing to monitor that, and that's been a major force in the market year to date so far. And then lastly, in a little bit more exciting news, the SpaceX IPO. That was something that dominated the first part of the summer, the largest IPO in history, and it actually made Mr. Elon Musk the world's first official trillionaire. I'm not sure that's a good or bad thing, doesn't matter, but certainly something to note, and it was an exciting thing for the market. I think we might see a couple more large IPOs here towards the end of the year. So on the economy side, it's a weird economy. It's an economy that's sending mixed signals right now. We've got record corporate profits that continue to grow. We have strong employment still. We have a resilient consumer base, at least broadly speaking. And those are all signs of a healthy economy. On the flip side, we're starting to see inflation tick up, both from a core and a headline perspective. Some of that probably has to do with oil prices, but certainly not something that's necessarily healthy for the economy. We also have seen consumer spending is really focused on the top 10% of earners and wealth aggregators. So the rich continue to be able to spend well, and they feel comfortable financially. The people that aren't doing so well are certainly being hit by inflation, and they're certainly pulling back spending. So it's something to monitor. Those are typically not signs of an overly healthy economy, but it's kind of mixed signals. So certainly paying attention there. And then lastly, interest rates. Coming into the year, we expected the Fed to potentially cut once or twice. At the last meeting, it seemed like the consensus is now that there might be a rate hike before the end of the year, which would not necessarily be a great thing for either the stock or bond market. But it's probably priced in at this point, and it's certainly something that investors are going to continue to monitor from the economic side. Speaking of the bond market, right now coupons are still going to be the largest driving force of forward-looking returns, right? What you get paid to hold the bond. In an interest rate environment that's either going to be relatively flat or potentially even increasing, we don't really expect to see any sort of principal appreciation on the bonds. More so, the return from them will come from the coupon or the yield that they're providing, which really is and has historically always been the leading indicator of future-looking returns for bonds. Higher coupons tend to lead to higher bond prices over time. And so given the fact that we're in a more elevated coupon/interest rate environment than we were 5 years ago, we're still seeing rather attractive yields on quality bonds, whether it's government, corporate, muni, et cetera. So I think the bond market is still a great place for future-looking returns. And let's not forget the role of bonds in a portfolio, right? It's primarily 2 reasons. One, interest rates, income, especially for people that are retired or taking money off their portfolios. But then also it's for the volatility protection to some degree, right? Bonds should be more of a stabilizer if we do see a pullback of sorts. A 60-40 portfolio, tends to only take about 11 months historically to recover from a bear market because its trough isn't nearly as deep as a 100% equity portfolio, versus about a 24-month period for a full S&P 500 portfolio to rebound. So again, income, it's great. A little bit more stability is something we're certainly looking at in the bond portfolio as well. So I think we're pretty happy with with where the bonds sit, and we think there's a lot of opportunity still in the fixed income market. Moving more to the stock market, which is what gets almost nearly all the headlines. We are at all-time highs. It was the best quarter we've had since 2020, coming out of the pandemic. Given the fact that obviously the first quarter was a little bit rockier and ended on a rockier note, but the second quarter we saw a rip roaring back up into the right. The good news too is it wasn't all large cap tech driven, right? It wasn't the mega caps. It wasn't just Nvidia and Meta and Google and Microsoft, et cetera. We did see a broadening out in the equity markets, which we've continued to see, and that's certainly a sign of a healthy stock market. We want to see that broad participation beyond just 7 to 10 names driving returns. We've also seen valuations come back. So even though we're at all-time highs, valuations have actually restricted a little bit given the fact that earnings have grown, right? So, with corporate earnings growing, profit margins growing, valuations have actually come back, which makes it a little bit more attractive than it probably was at the beginning of the year, which is good for equity investors. Small caps, speaking of diversification and the broadening out, small caps had their best first half of the year since 1991. Right, that's a long time. We're talking 31 years since we've seen returns like we saw in small caps this year. Emerging markets have outperformed the S&P 500, as have mid caps. So we're seeing that broadening out, reminding us that diversification is important. It's not out of vogue, and we can never predict what the industry, sector, geography, which ones are going to lead, given year in, year out. The importance of holding all of them in a well-diversified portfolio, and investors that do, so far are seeing the benefit of it this year. So that's kind of a little recap on what's gone on in the market and the economy so far this year, and some of the things we're looking to in the future. We'll continue to pay close attention. Obviously, it's what we do on a day-to-day basis, and we've got a great team for it. So in closing, I want to say thank you to everyone who's participated in our events, who has come in and made sure they met with us. The more engaged our client base is with us, the more fun we have, the more meaningful our relationships are, and I think the better results we all see together. So it's been a great first start of the year, or first half of the year for Stonebridge, and hopefully all of you as clients as well. One thing I want to leave everyone with, as we're kind of midway through the year and we're in the summer, is I think it's a great time. I certainly try to do so myself, although oftentimes I fall short, of checking in and saying, hey, if I had goals at the beginning of the year, whether they're financial, fitness, fun, family, whatever they are, how are you tracking towards those goals, right? Are you on track? Are there changes that need to be made? It doesn't just have to be financial, but if you ever want an accountability partner, it's a large part of what we do, and we're more than happy to do so. Also, another way to check in is, where are you spending your time? How are you spending your time? Are you spending on the stuff that matters most to you, right? It's another thing that I think it takes effort to sit back and do it, but I think it's worthwhile. So a couple of things I would challenge and just say, more than happy to ever be an accountability partner, or just a sounding board if anyone wants to take advantage of that. I certainly see value in it. Last thing is, make sure that you are confident that you have a plan that dedicates your money to what matters most to you, right? If you feel that way, that's great. If not, let's talk about it. That's what we're here for. So we're talking about the portfolio, we're talking about the economy, and that's all great and important. But at the end of the day, as financial planners and comprehensive wealth advisors, we want to make sure that your money is directed and focused on the stuff that matters most to you, and that it's well connected. We have a plan for that to what matters most to you. So if you don't feel that way, let's have a conversation. I'll get off my soapbox now, but that's why we do what we do, and we love what we do. So I hope everyone has a great rest of the summer. Thanks for taking the time to listen to this if you made it all the way through. Hope to see you soon. We've got some great events coming up in the fall. I'm sure I'll meet with a lot of you and talk with a lot of you in the coming weeks and months. But again, thank you for your trust. We are honored to work with you and be a part of the Stonebridge community. And thank you for your trust and care for our community as well. Have a great summer. See ya.